Hi, this is Matt at SN Mortgage Company, and today I'm going to give an overview of the in-house loan process so that you can understand what goes into each step, how they're tallying your costs, and why they don't really have a final cost for you until closing day, because there's so much that goes into it. So here it is. If you've ever bought a house before, you've probably seen a list of the steps kind of like this one. These steps can be explained in different ways. Some of these steps don't involve action on the borrower's part. They take place behind the scenes, and the loan officer is responsible for communicating to you what's going on. The loan officer is the main contact point from start to finish. That's why they're called a loan originator. Either way, it's an LO. That's the abbreviation. Back in the day, loan officers often did every single step of the deal, but as it's becoming more nuanced and mortgage companies have become more efficient, the process is spread out. Nonetheless, the loan officer remains the primary contact point for the borrower throughout the loan. So the first step is connecting with an LO. Maybe they reach out to you, maybe you find them. Ideally, you start this before you get too deep into house shopping, because A, they can give you an idea of your buying power, and B, they may be able to help you lock your interest rate so it doesn't rise too much while you're shopping. Either way, the first step is pre-approval, and you could actually start this on your own if you want to, rather than calling them, not really knowing what to ask or tell them. You can just upload the documents, because that's going to be the first thing that they need, and then they'll reach out to you. So here's what you're going to need: 30 days of pay stubs at least, 60 days of bank statements, your ID, and at least a year of W-2s. Or if you have 1099s, it'll depend on your loan type. So if you want to get the ball rolling, go to their application link, and you can upload your docs to their secure portal, and they'll reach out to you when it's done. Once the lender determines that you're eligible to proceed and they give pre-approval, they are invested in you, but you don't know anything yet. If and when you've got a contract on a house through your real estate agent, the real estate agent needs to contact the loan officer to make that official, and now we'll go into a more thorough review of your financial position. This is where the processors and the underwriter get involved. The processor double checks everything and sends it to the underwriter, who can grant you a conditional approval, still contingent on your financial info and ability to pay remaining as is. Underwriters are governed by federal regulations to ensure that the details of your loan app are accurate right up to the day of closing. Now, some lenders will list the approval as an additional fee, some will roll it directly into the underwriting cost. Make sure you're clear on that. At SN, it's all one thing. So at this point, the processor is still on top of everything. They're communicating with the underwriter, they're communicating back to the loan officer. The processor and the loan officer are kind of considered part of the same immediate team. They have certain individuals that they routinely work with. So either of them might give you a call at any point saying, hey, we need this particular backup document, or whatever it may be. Every loan has different requirements, and they're finding out new things throughout this process. So be quick to answer your phone if you want your loan to go through fast. Now, if you need to call and ask a question, the LO is still your main contact point. Your realtor doesn't know what's going on here. Your broker can't answer your questions. You have to go to the loan officer and they'll take care of you. Now, after the loan is cleared by underwriting, we say it's clear to close, CTC. That's the best phrase in mortgage lending. It means that as long as the borrower doesn't do something to mess with their credit, their DTI, their employment, all the things that they've been warned about, then they're going to be smooth sailing the rest of the way. It's just a matter of signing papers and paying those closing costs. So the other fees you may see tallied into the closing costs, which you might have already paid, include the appraisal fee, which is required by underwriting to verify that the home is accurately valued, the credit pull fee for obvious reasons, and the flood certification, which basically checks whether or not the property is in a flood zone, and any other required appraisals. Then lastly, the title company has their own fees. That's one of the reasons we can't tell you up front exactly how much you have to bring, because they have different fees. Only that you need to hang on to some cash. And if that money comes from someone else, tell your loan officer you need a gift note before you go dropping money in your bank account for even a second. That's as bad as taking it out, and you're not allowed to do that. Underwriting is going to get a notice and they can't look away. That's just how it is. You will get an estimate of total costs from your closer. They are their own department. They see all the documents and they're going to tell you, hey, here's what you safely need to bring to the closing table. So to summarize my point, there are costs other than the advertised down payment. It's not that anyone's trying to trick you. The loan officer wants you to get the best rate possible, okay? They're not paid based on how much money you end up spending right then and there. They just want the deal to go through. And a good loan officer is going to prepare you for the reality of that so that the loan doesn't come crashing down midway. Nobody wants that. If it looks different from the numbers that you saw promoted, well, take a look at how that's broken down. There's a good reason for it. So finally, when the closer gives the go-ahead, things can come full circle. You get to see your loan officer again, sign the papers, get the keys, pay your title company and your closing costs, and then you're in your home. Hope this explanation makes a little bit of sense so that you don't think that your loan officer is just kicking back and doing nothing while your loan's in process, because it's complicated and they want to get it done as quickly as they can at the best rate possible. Now, if you want more info, there's a whole lot more on our page. We've talked about some of these topics before, but I hope that this wraps it all up nice and neat so that you contact the right people and you know exactly where they're at during your loan. Thanks for watching.